Jim,
Hello.
we've got you live. Hey, Jim, we've got you live in the room. You can go ahead and take it away in the next 30 minutes. The room is yours.
Thank you, Morgan. Hi, everybody. Jim Crimmins here from Phoenix, beautiful downtown Phoenix, where it's going to be almost 75 degrees today. I hope you all are having as good a weather as we are. What we're going to talk about in the short time that I have today is probably something that is not understood by a lot of traders. However, the more successful ones do get it and utilize it. What I want to talk about is how you can increase your cash flow if you use a tax-efficient trading plan. And I'll give you just a few pointers today on what a tax-efficient plan is. Of course, we've got to get the legal stuff out of the way there, so I hope I've given you enough time to read it. And we'll go on. Traders Accounting is a firm that has been around for about 15 years now. We started in Seattle, Washington. Has since moved to where the weather is a bit better. And what we do is taxes, bookkeeping, and consulting for active traders in the market. Our website is tradersaccounting.com. I urge you to go there and sign up for our free newsletter. A lot of free things come out in the newsletter, and important things that never come out anywhere else that may affect you. The Robinhood tax, we came out probably 3 weeks before anyone else, and how that was going to affect traders at the end of last year. And so the newsletter is pretty neat to get. Phone number is there. If you've got any questions today, if I don't have time to get them, send us an email at learn@tradersaccounting.com. We want to get them all answered. And we do have a blog. When we talk about tax efficiency, what we talk about is putting a program together that an active trader can use to increase their cash flow. Now, I'm both a trader and an accountant. And the one thing that I have learned over the years is that my most important task is increasing my cash flow. If I run out of money, I'm out of business. So just managing my cash flow is the most important thing that I can do. By having tax efficiency with our cash, with our trading plan, then we have more profits a lot sooner. Because you, as a trader, have actually two ways to increase your cash flow. If you agree with me that it is the most important task you have, is the management of your cash flow, you get to choose two ways to increase that cash flow. Number one is to become a better trader. And I know all of us are striving to become better traders, whether we're newbies or whether we're old salts. We're always striving for different ways, and this is a perfect way. This TradingPub, listening to different people speaking, I was very impressed with the previous speaker and trading ETFs. You can learn a lot doing this, so you guys are to be commended for being here. But one thing I do know is that I have never in my life met anyone that told me that they set up at 3 o'clock in the morning and said, aha, I finally got it. I know now how I can double the money that I make every day with my trading. It just doesn't happen. So increasing our profits and our cash flow by becoming better trader is a very slow, incremental process. And again, we should all be striving to do that. The other manner in which you can increase your cash flow is deciding to trade as a business. Now, I don't know what kind of business, and I am not trying to tell you what kind of a business today because I don't know anything about you. There are lots of business types that you can trade as. You need to pick the one that suits you. It's just like trying on a new pair of pants. and getting the one that fits you or getting the one that does not fit you. I went to the ball game yesterday out here, the Mariners game, and I was surprised. There was a lady right in front of me. Every time she stood up, her pants were halfway between being a pedal pusher and a regular pair of pants to cover the shoe. And I thought, man, I don't know where she got the information that she should wear something like that. But that's not what we want to do when we're picking a business. The business that we want to pick has to fit us. And you can have a sole proprietor to trade in. You can trade as a flow-through entity, an LLC. You can trade as a corporation. Any of those businesses will allow you to become a more tax-efficient trader. But again, you need to pick out the one that is going to benefit you the most. Now, taxes are going to be your largest trading expense, whether you make money or whether you lose money. Now, you can understand with me, with our antiquated tax system in this country, that as you increase your trading profits, you're going to pay more and more taxes on those trading profits. It's called bracket creep because your percentage that you pay goes up as you become more successful. Seems like it's just should be the inverse, but it's not. How, though, can I say if you lose money, your largest expense? Well, it surrounds the $3,000 capital loss maximum that you can take off of your tax return each year. I hope all of you are aware of that no matter how much you lose in capital losses, that the most you can take off your taxes are $3,000. So let's take old Johnny Kumquat, who was trading this year and lost $13,000 in 2012. If he's only able to take $3,000 off of his taxes, he's leaving $10,000 of loss on the table. That's not tax efficiency. If he were in the 30% tax bracket, can you see with me he just left $3,000 on the table? But there is a way, if you trade as a business, that you can take all of your capital loss in any year that you don't have a great year. Because for every dollar that you can write off, your cash flow is going to increase. That $3,000, had old Johnny been able to take it, would provide him a lot of trading money to utilize. And what I'm trying to say is, if you follow a tax-efficient trading plan, it's going to help you maximize your cash flow. There's just no way that it will not. How are traders taxed? Well, most of us are short-term traders. And the tax code says that for short-term, that's anything that we hold less than 365 days a year. Our trading profits will be taxed as our personal income. So whatever percentage your personal income, whatever tax bracket you're in, that's how the short term is going to trade. Now, you might be taxed as capital gain, 15%. You might be taxed if you're trading Forex as ordinary income. That would still be 15%. So that's what we need to worry about, is what size chunk are they going to take out? Because there are two tax codes in this country. Number one is for individuals. There's an individual tax code. And as individuals, we're just not able to deduct a whole lot of money. You know, we're able to deduct a few mortgage items, maybe some charitable contributions, our kids, and that's about the extent of it. Now, there are a few small business expenses that we can deduct if we're trading as an individual. but they're few and far between, and none of the big expenses are able to be deducted as an individual because the IRS considers them to be hobby expenses if you're trading as an individual. Anything that you're able to deduct is subject to the 2% threshold, which means that if you've got $5,000 in expenses and you've got $100,000 in income, 2% of that $100,000 is going to be the threshold that you need to jump over. So $2,000 of your $5,000 worth of expenses are not going to be able to be deducted. It even gets worse than that with your medical. Your medical is 7.5% threshold, so most of us never get to deduct anything in medical, but there is a way. If you're a trader that has over $3,500 a year in medical expenses, there is a way that you can set up a business to deduct all of your medical expenses, everything, insurance, deductibles, co-pays, things that are not covered, even some over-the-counter medical items that you buy in the drugstore. So that's what I'm saying. The different type businesses fit differently. And if you're a trader that has these medical expenses, you would probably want to pick that type business because it even will allow you to deduct your Medicare. And there's no thresholds to jump over or anything else. So individuals get to deduct very little. But on the other hand, the other tax code is business. And what the IRS says about business is that you're able to deduct all ordinary and necessary expenses for the business that you're in. That's Section 162 of the tax code. As a trader, there's probably 30 type of expenses, many of which you might consider right now if you're trading as an individual as personal expenses that can be deducted. If you've ever owned a small business and you realize what a great tax benefit a small business is to you, well, anybody that is actively trading can set up a business to trade in. Now, the active trading, if you ask 5 accountants what an active trader is, you're going to get 6 different opinions. My opinion, for what it's worth, is that if you spend at least 500 hours a year on your trading, and that would be setting in webinars like this, actually doing trading, studying, looking at charts, anything having to do with trading, and you can reach that 500-hour threshold, and you trade throughout the year, that you can qualify as a business. So a business can deduct all ordinary and necessary expenses for the business you're in. And folks, if you would like a free spreadsheet, it's Excel, so you have to have Excel on your computer, but if you'd like a free one, use that email address, learn@tradersaccounting.com, and send me an email and just put in the subject matter, just put up their spreadsheet. I'll be more than happy to send it. It's a fairly substantial Excel spreadsheet that will show you all of the expenses that we think an active trader generally can take if they're trading as a business. It's even set up so you could set up a budget for yourself if you'd like. Again, that's learn, L-E-A-R-N, @tradersaccounting.com. So anyway, with these 2 tax codes, both of them are legal. Both of them are available to anybody. You get to decide which one you want to use if you qualify as an active trader. Now, the benefit that you're going to see right away if you set up a business to trade in, you can deduct your expenses, but let's talk about that for a minute, because it's even better than you might think. number one, if you set up a business, you're able to go back 12 to 15 months prior to setting up the business and accumulate all of those expenses that you've already spent money on that are business expenses, bring them forward, and you're able to deduct $5,000 of those expenses the first year, and then you amortize the rest of them. So that's one big benefit, particularly if you signed up to go to a trading school in the last year. Being able to deduct that, let's just say, well, I'm guessing now that our average trader, when they set up their business, has about $10,000 in trading expenses. So again, if they're in the 30% tax bracket, that's another $3,000 that they're going to have to trade with. This is what's called tax efficiency. And then the expenses that they have going forward are all deductible also. So, you know, you're paying money for satellite probably, or internet connection. You're paying money for newsletters, for newspapers. All of these things are deductible. You're paying money for office equipment, and if you're like me, I print out a lot of charts. So the ink for my printer and the paper that I use, it's deductible. It's deductible to go to a trading seminar or a trade show. All of these are deductible expenses. So when you mount them up, they become a lot more than you think that they are right now. And each one of them is deductible, and for every dollar, if you're in the 30% tax bracket, that's 30 more cents to trade with. And I know that doesn't sound like a lot until you put it all together. I know one of the things that I encourage our clients to do is to keep a log for their car. Now, a trader doesn't have a whole lot of use for car. But if you go to let's say you belong to a trading club and you go once a month or twice a month to it, or you go to the airport to fly to Vegas for the Traders Expo, or you want to go to Alabama. Now, why would anyone want to go to Alabama? I'm just kidding, Morgan. I love Alabama. Anyway, if you want to go down there and go to a trading school, all of the mileage that you put on that car is going to count up. Now, it's not going to count up very fast, but we want to start designing a whole new mindset for ourselves so that we take every penny that we can, because every penny that we can is going to help us become more tax efficient and have a lot more cash flow. Now, for the IRS, we have several classifications as traders. Number one is if you're trading in your own name, you're considered to be an investor. It doesn't make any difference how many trades you make. It doesn't make any difference how much money you're trading with. You have to set up a business. Just by doing that does not give you the ability to deduct your expenses. Now, the next step up from an investor, and all of us start as investors, the next step up is to trade as a sole proprietor. And most of us have heard that it's called trader status or trader in securities. And you don't really, setting up is probably a misnomer for that. At the end of the year, if you qualify as a sole proprietor, then you would file a Schedule C. And if any of you have had small businesses, you understand that the Schedule C is a small business tax return. It's actually part of your 1040 before it's all over, but you would put your revenue, your expenses, and your net income on a Schedule C. There's quite a few hoops to jump through to make sure that you qualify as a sole proprietor. The IRS doesn't have any of these rules in their code, but what they have done through the use of the tax courts by trying to force the issue, they have penalized traders. You can find a list of the polls you need to jump over to be able to qualify by going to the IRS website. It's irs.gov. They've got a great search engine. Just put in Pub 550, P-U-B, for publication, 550. Download the one that's in Acrobat because it's the most complete. You can save it to your computer. Then you're going to go back to about the last page before the index, and you're going to find 2 paragraphs on how you qualify to be a sole proprietor. The other side of that is to set up an actual business to trade in. Now, once you set up a business to trade in, that'd be a C corporation or a pass-through entity like an LLC, you don't have those same qualifications. That's where, when I said you need to trade 500 hours a year, you need to trade throughout the year, and you need to trade short-term stocks, options, whatever it is that you're trading, Forex futures, need to be short-term trades. That will qualify you with the C corporation or the LLC. To me, it's a bit safer to have those. Doesn't cost a lot to set one up, and in addition, the cost of setting it up is an expense that you can deduct, so it even becomes a better bargain by doing it that way. So these are the business entities that you might use. The pass-through entities are the limited liability, the S corporation, or the a limited partnership. Now, you never want to trade in an S corporation. Never trade in an S corporation because the IRS has ruled forever that if you're in an S corporation, a reasonable, that's their word, a reasonable amount of the profit has to come out as payroll. Now, what they think reasonable is for most small businesses is 50%. But what happens when you have to pay payroll? You have to pay payroll tax, too, and that's 15.3%. So that's not a real tax-efficient way to trade. So I always recommend an LLC or a limited partnership, depending on what state you live in. How are you going to decide which one's best for you? I would recommend, I highly recommend this. We have a free service. We've had it ever since we've been in business for 15 years. Well, we can have one of our consultants meet with you on the phone for 30 minutes, find out all about you, find out what type of trading you're doing, how you're doing, what your goals are, short and long term, and then they can make a recommendation whether you should be a sole proprietor or whether you should be a C corporation or an LLC. Now, if you'd like one of these free consultations, and there's absolutely no obligation, send just in an email to learn@tradersaccounting.com and put in the subject window, consult. Learn at Traders Accounting and consult. Now, going back to where we started, investors, if that's how you're trading, you cannot take most of your trading expenses. You're always going to be subject to away from the $3,000 loss rule. All of these things are going to create an atmosphere that is going to be negative when it comes to tax efficiency, because none of these things are going to help your cash flow. Why do I think we should use entities? Well, we can deduct our trading expenses without worrying about the special rules for the traders. We can go back 12 to 15 months and recapture our previous business expenses that we've already paid for. All of these which will increase your cash flow. We've got perks. If you use a C corporation that has a medical reimbursement plan in it, you can deduct all of your medical expenses that I discussed before. And in addition to that, when you use an entity, you've got the wealth protection. You really need to think about wealth protection as you become a better trader. I don't know about where you live, but in Arizona from time to time we have what's called a frivolous lawsuit. And they're becoming more and more common all of the time. You want to protect yourself from those, and if you trade in an entity and you are sued personally, they're not going to be able to generally get to your trading capital, because once that trading capital goes, as we discussed before, you just don't have anything to trade with. It's like a retailer without any product. If you'd like the handouts that I talked about, if you'd like the presentation slides, we'll send you our regular size presentation slides. This has been modified for a shorter time period. But just send an email to that learn@tradersaccounting.com with presentation slides. If you want the expense sheets I talked about, do that. One thing that I wanted to tell you about signing up for our free email newsletter, the Department of Labor has some pretty stringent rules on what qualifies as a proper trading vehicle for your IRA. And there is a recent Department of Labor letter that you should be aware of if you're trading in your IRA. Send the email and we'll send you the actual letter from the Department of Labor. You can decide yourself if it's important or not. If you want to know how the IRS defines business or hobby, the IRS definition letter, go ahead and send the email to learn@tradersaccounting.com. We'd be more than happy to do any of this. And of course, again, if you would like to have a consult with one of our consultants, probably won't be me, but could be. But anyway, send that email in and decide. Even if you're not ready to do it, get a handle on what you should do when you are ready. Won't cost you a dime. You get to meet somebody that's pretty nice, and you can go from there. I am going to take any questions that have come up. I see that Alan has asked one. How do you get around the earned income? I'm not sure, Alan, that you can. Obviously, you can. If you set up an LLC, by earned income, I am assuming that you mean the payroll tax, or are you meaning something else? Let me know on that, Alan. Are there any other questions that I might be able to answer in the 2 minutes that I have left? Terry says, I'm a snowbird in Mesa. Can you help me set up for Oregon? Yes, we do. We have clients in every state in the union. Terry, I don't know why you're in Mesa, though. I'm in Surprise, so you ought to come over here. Wow. Now they're coming so fast I can't read them all. Robbie says, hi. Hi, Robbie. How you doing? Section 988, Eric says. I don't know what you mean by that, Eric. You want me to talk about Section 988, or I don't know what you want. Larry, what proof do you have when a future goes broke? Well, I would assume that your broker is going to send you something, Larry, either at the end of the month or at the end of the year, that will show that, but I've never been asked that question. I don't trade futures, so I honestly don't know. Does anybody have an answer for Larry? Eric says, what is the Section 988 election? Eric, I would have to go back and look that up. I'm not positive. Is that the mark-to-market election? If it is, mark-to-market is an accounting method that anybody that's trading as a business can make by sending a letter to the IRS. And if I'm off base on that without my cheat sheet here in front of me, Eric, send me an email at that learn@tradersaccounting.com, and I'll look it up to make sure that I'm absolutely right on that. Monty says, how can we get a hold of you? Learn@tradersaccounting.com, Monty. Just send an email, and one of us will call you back. Eric says, do traders pay payroll tax? Well, only traders that trade in an S corporation, or, Eric, if you're trading in an LLC, there is no payroll tax on your trading. Thanks, everybody. Thanks, Morgan. Appreciate your having us here. I know I'm going over, and I really don't want to. So if any of you have any other questions, send them to me at learn@tradersaccounting.com, and we will get them answered. Good trading, everybody. Bye-bye now.
All right, good deal. Well, thanks again, Jim. We appreciate you being here for sure. Again, been on here many times, and always love having you a part of our TradingPub events. So we look forward to seeing you guys back very soon. I would just like to remind you guys that we've got a special presentation. I'll actually be doing a presentation today at 3:30 today. So let's see here. We'll just put a timer up here. You're welcome to stick around. We'll just leave the room open since the next event's going to start here in about an hour and a half. I'll put a timer up there that you can kind of keep an eye on, and we'll go silent, and you guys are welcome to join us for that. Thanks, everyone.